I'm great, man. Always on a Monday. Always on a Monday. This is one of the crazier Mondays I can remember in my career. Hey, as the Chinese curse says, may you live in interesting times. Here we go. This is off to an interesting start. This week is, anyway. Act environment where you would see it change. Because this is the kind of environment that wakes people up and increases volume industry wide tremendously. So I would bet dollars to donuts that when we talk next week, I will tell you the premiums have risen. In fact, I shouldn't say that. I spoke with my head trader recently, this morning, yesterday, I don't even remember. Today's been so busy, but he did say in trying to get 100-ounce bars and kilo bars from Valcambi, one of the Swiss refineries, that they are raising premiums. We will see premiums rise.
In today's news recap, silver price faces bloodbath as fears of global slowdown intensify. Silver price faces an intense sell-off below $28 as broadening demand concerns. Weak U.S. employment and manufacturing PMI prompted risks of global slowdown. U.S. bond yields weaken as investors see the Fed delivering a bulk rate cut decision. Silver prices down by more than 5%, skids below $28 in Monday's European session. The white metal nosedives to an almost 3-month low as fears of a global economic slowdown has intensified after a string of United States economy data indicated that the nation is moving towards a recession. Recent U.S. data showed signs of slower labor demand and sheer weakness in the manufacturing sector. The U.S. unemployment rate rose to its highest since November 2021 at 4.3%. Meanwhile, the manufacturing PMI for July contracted at a faster pace. Investors have remained concerned over the silver's demand due to China's economic vulnerability. The Chinese economy is going, though, a rough phase due to weak demand conditions in the domestic and the overseas market. Meanwhile, a sharp decline in U.S. bond yields and the U.S. dollar due to growing speculation that the Federal Reserve will deliver a bulk rate cut in its September meeting fails to lift the silver price. 10-year U.S. Treasury yields plunged to near 3.67%. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, plummet to more than annual low. Silver technical analysis. Silver price weakens after discovering strong selling interest near the prior breakdown zone. The asset has declined to near the 200-day exponential moving average, suggesting that the overall trend is uncertain.
Realize that things are beginning to break, and they realize that a sell-off like this often happens counterintuitively. I never know what to make of it. People say the conventional wisdom is that you throw out the baby with the bathwater in order to meet, for example, margin requirements. And if you look at the unwinding of the carry trade, it would certainly, with the yen strengthening the way that it has been, it would elicit margin calls on these levered positions. And whether or not it's people selling their gold and silver because it's so highly liquid, or it's just the cartel's way of continuing to step on things to make the perception of gold and silver being the place to run, kind of trying to sever that relationship, which is more along the lines of what I think people are seeing through that. The tricks and the methods that have been used for a very long time, I think, are growing long in the tooth, and they are becoming far more transparent to the investing public. And I would say today's been one of the busiest days we've had in months, literally, maybe even going back to last year when we had the banks fail. People are not dissuaded whatsoever. In fact, I think they're quite incentivized to see the value that is found here in a price that just got, clubbed. Although it's interesting with gold, it's back above $2,400 and only down a little bit right now. The futures I show only down $23.50. they were down as much as 70 plus earlier this morning. And so I think it was 200,000 yen in 2020 and roughly 250,000 yen in October 2022. In 18 months from 2020 to 22, the price of gold went up $25 in yen. It spiked to 278,000 yen in July of 2023. And as of just the other day, not too long ago, just a couple of days ago, we were over 383,000 yen. That's 38% increase in 1 year. So you can see as the yen has really gotten into trouble, gold has done what it is supposed to do, and it has gone much, much higher. So I'm not worried about where gold and silver end up. I think this knee-jerk reaction is exactly the way our clients are reading it, and it's a subsidy. It's an opportunity.
In today's news recap, Chinese silver trading powerhouse eyes expansion in Singapore. The commercial division of Chinese private smelter Hannan Jinli Gold and Lead Group Co. is looking to expand its commodities trading team in Singapore as the industry turns increasingly bullish on copper, aluminum, and other metals. The division, which handled about half of China's silver exports last year, is aiming to hire more physical and derivative traders for industrial and precious metals, said Eric Hu, general manager of the trading arm, in an interview in Singapore on Friday. The company hopes to grow its trading team in Singapore from the current 4 to 15 to 20, said Hu, a 2-decade silver market veteran who currently leads a group of more than 100 metals traders and other staff across Shanghai, Hong Kong, and Singapore. I know it is not easy and will take a long time as competition for talent is getting intensive, he said. Metals markets are being transformed by increasing demand from renewable energy installations, artificial intelligence, and supply shortfalls. That's encouraging some of the world's biggest energy traders to get more involved in metals, a sector that's been dominated by behemoths Glencore PLC and Trafigura Group. Jinli Industrial International PTR, the Chinese company's Singapore subsidiary that officially started operations last October, has hired Noel Ruan from Mercuria Energy Group and Bruce Wang from Citigroup Inc. in the past 6 months, Hu said. Both confirmed their own moves. The company's Hong Kong trading subsidiary sold about 2,000 tons of silver ingots from different smelters in China to overseas clients in 2023, including top bullion banks such as JP Morgan Chase & Co., Hu said. Official customs data shows. Now smash the subscribe button and turn on notifications so you do not miss out our daily recap. Enjoy the episode.
And austerity. They're trapped between if they raise rates, they blow up the system. And if they don't raise rates, and again, that would be to keep inflation in check. And if they don't, which they won't, you're going to see inflation, I think, just get out of control. And even, even if the budget was balanced today, we still have, nearly 200 trillion in funded and unfunded liabilities that need to be paid for. We are a country that is addicted to spending, period. And at the level of debt creation, they have no choice but to lower rates. The whole system is on the verge of breaking apart. And they will do what all governments have done since the beginning of time, and that is acquiesce to inflation. But look, there's all this talk of the massive insider selling and Buffett selling $71 million worth of Bank of America shares and dumping his Apple shares. And the insiders see something coming, no question about it. And the Fed is late in all of their actions. This will be no different. We are not out of the woods yet, and a 50-point or 75-point decrease in interest rates isn't noticed. But look, silver's rallied by over 100% since its low in 2020. It's up, 105, 110% from its low point of under $12 an ounce. And I think that probably comes as a surprise to people who are just following silver kind of passively. Watching gold at $2,400 an ounce. Silver will have its day, no question about it. And I think guys like Warren, I'm sure they notice very well and understand very well gold and silver, and probably have a significant position in it, just don't tell the world about it. They make their money on he makes his money on equities, and so I understand that. But I think for him to expect him to not understand it, look, gold has outperformed the S&P 500 even with dividends reinvested for 25 years. It's averaged 9.9% compounding since the beginning of the century. That's outpaced just about anything Warren owns. And I think it would be foolish to assume that he doesn't own any. He may not talk it, but when you have the wealth that he does and your influence is centered around traditional assets and securities in American corporations, that makes sense to me. But oh, don't be surprised if he and others like him have nice stashes of gold and silver physically held safely away somewhere to protect even his large stack of cash. So I guess we'll have to see if he's going to add any to Berkshire Hathaway. Looking for a value, you sure think he'd find some in the mining shares. I know he's added mining shares before. I don't know. I haven't looked lately to see if he has any in there now. But geez, I couldn't think of a better place to find value for a value-based investor like Warren.
What do you think of Andy's take? Do you think gold and silver price manipulation will end up soon with prices soaring to record highs, or do you disagree with him? Post in the comments section your price prediction for silver by the end of the year, and share with the stackers your exit strategy or buying levels. Me personally, I'd be looking forward to unwind a significant portion of my silver at $50 and would be selling all my stack if we get past $100. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.